Hey people, of about the profitable investor here. So I want to quickly introduce us into the concept of candlesticks. My focus is to walk us through the component of a candlestick, the body sizes, and the shadows of a candlestick. Okay, I'm going to be very straightforward and I'm going to be direct, giving you the basic ingredients you need. Okay, so what exactly is a candlestick? Okay, a candlestick basically is a graphical representation of the market condition, what has been happening in the market. A market comprises of buyers and sellers and a commodity or an asset, whatever. Now, so a candlestick represents what has been happening, and when it represents it in a way that when a market is buying, it is easily known, and when it's selling, it's easily known. Okay. Now, why is candlestick under why is now, why do we need to understand candlesticks? Understanding candlesticks helps us to understand patterns, it helps us to understand trends, and it helps us to understand what has been happening in the market before, what is happening currently, and what should happen in the nearest future. So, the candlestick so the component of a candlestick now, let's look at this for example. Now, this is a chart, and I'm looking at euro versus US dollar, and I'm currently on a 1 hour time frame. On the right hand side, we have the prices, and on the extreme on the bottom we have the date. All right, so a candlestick now, generally speaking, a candlestick that represents a buy or that represents buyers taking control of the market is represented with color green. Some people use color white, although you can use any color, but I prefer color green. Now, while a market dominated by sellers is represented by color red or color black. Good. Now, a candlestick comprises of five major things. Okay. Now, so let me just analyze this long candlestick. All right. Now, for a buying market, we call it bullish. Okay, that is gaining momentum upward. Now, in such a case, the first component of a candlestick is called the close. Is called the So in such a case, the first component of a candlestick is called the open, and this is the point at which market started. Is the point from where the price started. So on this level, the price started at 1.12684. Now, on the other hand of this, which is around this level, 1.13431 is called the close, and this is the point at which the market closes for a particular period. Now, if you look at the extremes, on this high extreme, this thin line above is called a tail. Some people call it shadow, some people call it wick. Okay, WICK. Now, and on the extreme two is called a shadow, tail, or wick. Now, for each of them, it represents a movement in the market that is characterized by high, or let me say, so the so this so So this portion, this highest portion, 1.3, 1.13502, represents the highest point price reached within a period, while the low portion represents the lowest point price reached within this 1 hour time frame. Now, between that period, between the open and the close, is called the body. Okay, which tells us what exactly has been happening, the price dynamics, what has been happening in the market. So in this kind of situation, this market has been buying. So the color of the body tells us what exactly has been happening. For example, you can see this is a green body, which tells us it has been generally buying, and on this other hand, this is a red, which tells us a sell. Okay, so let me establish that for a buying market, we call it bullish, and for a selling market we call it bearish. Okay, now let me quickly run through the body sizes, okay, which is the difference or the range between the open and the close. Now, the open of a market, especially the open price of a buying market, of a bullish market, is always at the bottom while the close is always at the top. All right. But for a selling market, the open is always at the top while the close is always at the bottom. That is coming from high to low. All right. Now, talking about candlesticks body sizes. Now, whenever we see a small body or a small candlestick, it tells us that very little activity happened within that period. Okay. So, for example, on this current candle, we had very little, or let me use this, very little selling opportunity came here. Unlike this, where we had a very high level of buying, a high momentum of buying. Okay, so that is important in understanding candlestick. All right. So another thing I want us to understand briefly is the concept of shadows. Shadows are also known as tails, or also known as wick, and basically they are the point. They are those lines, those long thin lines drawn at either the open or the close of a candlestick. All right. Now, a short or a very small shadow or tail indicates that in that market situation, we have little trading activity. And when you have little trading activity, it means that the demand and the supply is very low. And in that kind of case, you have less tendency to make money. Unlike a market that has characterized with a lot of high candles, long candles, and all of that. Okay, so basically they're just two types of tails, really, two types of tails. We can have a tail with that has a long upper tail. Okay, a long upper tail. Let me set an example. A long upper tail. Okay, good. If you look at this critically, this current candle, this very candle, let me use my marker. This candle. Now, if you look at that candle critically, it has a long it has a long tail, and this is called, in this kind of situation we call it, this very one, in this kind of situation we call it a higher candle, a long upper tail. Okay, a long upper tail. And what does it mean? It means that when market started at this level, price went up and operated within this range for a while, but the presence and the influence of sellers came and drove the price down. All right. So in a situation whereby we have the reverse, a long lower candle, a long lower tail, it means that price started from this level, is a bearish candle, and came down to this level. Okay, but buyers came into the market, and in an attempt to find equilibrium, it pushed the price up, and the price had to close at this level, at the level of 1.12219. All right.